I don't care about what's happening in the retail sector. Big money, even in the face of rising interest rates. And suppression is keeping the gold and silver price elevated. I think you will see it go higher than anyone thinks possible once the suppression is over. And I quite frankly think that Bank of America may have finally realized the potential precarious position they've put themselves in. They just came out their third quarter balance sheet and talk about 131 billion in unrealized losses. You cannot continue to suppress the markets in that fashion, in a naked fashion, especially when the rest of the world is on a campaign to accumulate it. I think it's very dangerous and could very well spell doom for a company like Bank of America.
Gold prices continued to defy rising rate hike expectations and surging Treasury yields, stubbornly hovering near $2,000 per ounce. On Tuesday, gold prices inched upwards as benchmark U.S. Treasury yields retraced their steps, having crossed the 5% mark in the previous session. Meanwhile, investors remained poised for upcoming economic data later in the week to gauge the trajectory of U.S. monetary policy. According to Andy Schectman, the sustained increase in gold and silver prices can be attributed to suppression, which signifies market manipulation. He emphasizes that these prices are likely to exceed conventional expectations once this suppression eases. Historically, U.S. and Western interests have suppressed precious metals to uphold various facets of the financial system, such as bond markets and currency systems. Nevertheless, this strategy may face threats from entities ready to acquire these metals at subsidized prices, part of a broader plan by certain entities like the Chinese, who perceive precious metals as a form of wealth that should not experience rapid increases. Andy further speculates that Bank of America may have come to realize the precarious situation it has placed itself in. Bank of America reported unrealized losses of $131.6 billion on securities in the third quarter, an increase from the second quarter. However, the bank does not anticipate actual long-term losses from its portfolio. Unrealized losses have attracted increased scrutiny from investors since March, when Silicon Valley Bank sold a portfolio of its holdings at a significant loss, triggering its collapse and sparking the most influential industry turmoil since the 2008 financial crisis. Andy finds it alarming that the bank has maintained a substantial short position in gold and silver, which seems counterintuitive in the global trend of accumulating these assets. The continued suppression of the markets, particularly in such a conspicuous manner, carries risks and could potentially result in dire consequences for a company like Bank of America. We will bring you clips from Andy Schectman's interview with Liberty and Finance. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you and enjoy the video.
The real price setting mechanism, that the exchanges will be viewed for what they truly are, a fractionalized scam. I mean, you look at right now, the silver market as an example, the registered category on COMEX is now 1,666% rehypothecated. The vaulted silver in registered, the number of contracts in the registered category is 1,666% higher than there are bars backing it. Basically 1 out of 17. And, this is a situation that has enabled the U.S. and the Western interests to suppress metals, to support forever a bond market, to support a currency system, a whole financial system where gold and silver rising would signal frailty in the system, inefficiencies in the system. So they step on the mouse, or on the canary rather, and that's exactly what they've done. But what they never counted on would be these other entities who were standing by ready to take delivery at subsidized prices. And that fits right into the hand. If you are trying to buy it all up, the last thing you're going to do is let it move up too quickly. And if, as the Chinese do, look at this as wealth, as they have for centuries, then this is exactly the playbook you would follow. And if you buy it trying to get wealthy with, where immediate gratification is not fast enough, then you say when. If you have a broader perspective picture, a big picture of how important this is to own it and not to buy it to get wealthy, but because it is wealth, you don't really want to see, gold and silver going to the moon. If it do, what does that portray for a McDonald's hamburger or a bottle of water or anything in this country for that matter? What do the grocery stores look like? What are the shopping malls, if they're still there? What do they look like? And so I think that's a situation that's coming. And you can sense it. You can feel it. They're the ones buying it all, producing it all. They're raising the price. They're importing it all. It's not a good thing. And they're using it to their advantage until there's no longer any metal left to siphon. And you look at a company like Bank of America, who has, according to Ted Butler, 82 billion short in gold and silver. 32 billion, 23 billion he believes is short in silver. That's a billion ounces, basically, short silver on COMEX. Well, why the hell would they be doing that? Why would they be short, in essence, thousands and thousands of ounces of gold? Why? Are they trying to hold it back for some reason? And yet it continues to go higher slowly, even in the face of rising real interest rates, because there is such central bank demand, big money demand, once the suppression is over. And I quite frankly think that Bank of America may have finally realized the potential precarious position they've put themselves in. They just came out their third quarter balance sheet and talk about 131 billion in unrealized losses. 131 billion in unrealized losses. And if you want to sacrifice a commercial bank, that would be the one. And they hold this massive short position in gold and silver. Why? At a period of time when it's completely counterintuitive. Why? You cannot continue to suppress the markets in that fashion, in a naked fashion, especially when the rest of the world is on a campaign to accumulate it. I think it's very dangerous and could very well spell doom for a company like Bank of America.
Emerging market economies are expressing discontent with the dominance of the U.S. dollar as the world's primary reserve currency and are actively seeking alternative options. The de-dollarization trend is gaining momentum as an increasing number of countries opt to use their currencies to settle bilateral trade payments. Andy believes this reflects a broader shift away from the U.S. dollar. For instance, Malaysia has shown interest in using the dinar for trade with Islamic countries as a means to reduce reliance on the U.S. dollar. Many nations are now engaging in agreements using their local currencies, exploring the possibility of a shared settlement currency. China has been notably promoting the use of the yuan in bilateral trade and investment. The yuan has become the third largest currency for trade settlement and the fifth largest reserve currency. China's adoption of digital yuan for cross-border transactions represents a significant development. Notably, the Shanghai Petroleum and Natural Gas Exchange settled its first cross-border deal in digital yuan, although the counterpart's identity still needs to be disclosed. Andy also points out that gold prices consistently remain higher in China, leading him to speculate that this could be a strategy to gradually acquire more gold from the West by steadily raising its price. Let's get back to the interview.
We see Malaysia actively exploring the gold dinar as a potential new reserve currency for Malaysia. The prime minister of Malaysia just came out a few days ago and said if we can get between only 5 and 6% with Islamic countries using the dinar, it would be a positive start as it provides strength and reduces the dependency on the U.S. dollar little by little by little by little by little. This is what we are seeing. We're seeing all of these countries strike deals in their local currencies. They were all tasked, their finance ministers, going back to the drawing board, coming back in 24 with ideas on a common settlement currency. It will come. We talked a lot about Brazil and China doing this deal in corn a few months ago, where Brazil is the second largest exporter of corn in the world, signed a deal with China to sell them whatever they sell them, they'll accept payment in yuan, and China would accept payment in real. And now it's gone past corn. The export sales of U.S. soybeans have decreased by over 40% compared to the same period last year because the largest importer, which is China, has turned to Brazil and are buying Brazilian soybeans instead of U.S. soybeans, little by little by little by little. China came out, there was a report in Reuters last week, actually 2 days ago, October 22nd, wants to deepen oil and gas cooperation with Gulf countries and seek potential for cooperation in the new energy vehicle industry, such as power batteries and smart charging piles. So, look, all of the rare earth minerals, most of them are found in the Eurasian continent. President Widodo of Indonesia, who's an OPEC country, said, yeah, we need to create an OPEC-style cartel for rare earth metals as well. Not thinking this out very well. The you're seeing de-dollarization little by little by little. The Shanghai Petroleum and Natural Gas Exchange just the other day settled its first cross-border transaction in digital yuan. So they've done several transactions for oil settlement and natural gas settlement domestically, but this is the first one they did overseas. Now, they didn't tell us who the counterparty was, but that counterparty accepted digital yuan. It's the first cross-party deal they have ever done, which is interesting. And while we're talking about China, before we go on or I answer any questions that you have up until this point, a very interesting thing is happening. We've talked a little bit about how gold is priced over $100 higher in China. And I don't care what the conventional answers are by the talking heads. I believe they're doing it for a reason. They want to see at $100, how much gold can they siphon off from the West? How about 200? How about 300? Keep raising the price of gold and silver higher and higher and higher and watch the arbitrage that takes place. I do believe that you will see either Abu Dhabi, the United Arab Emirates, or Shanghai Gold Exchange in China take over for the COMEX and the LBMA at some point as they continue to lose legitimacy. And that's going to happen. Now, it's interesting. The three biggest Chinese banks that have been involved in setting and participating in the LBMA gold price auctions, the ICBC, the Bank of Communications, and the Bank of China, have all disappeared. They've just disappeared from the price setting of the LBMA, and without any real acknowledgement of anyone talking about it, or where did they go? Why did they just stop? I wonder, did they realize that the West is rigging the price and they just want to be out of it? And they can point to that. And that's why they're slowly raising the price in China.
While gold prices might maintain their current levels, there's a potential for them to surpass traditional predictions if this suppression diminishes. What lies ahead for gold prices in global finance, given the persistent market manipulations and unconventional trends? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.